And I want to focus just on two of them. So the first reason was appreciation. They said that as home values appreciate, homeowners grow their net worth, making a home not just a place to live, but potentially a smart investment as well. Now, they're focusing on the potential for the house to appreciate, but they're ignoring the possibility that it goes the other way. Houses can go down in value, not just up, especially if you're in an environment like the one we're in right now, where real estate prices went way up because of low mortgages. Now that mortgages rates have gone up, it stands to reason that eventually home prices have to drop because homes are unaffordable at today's prices, given the current mortgage rate. We've got yesterday's prices rather, but today's higher rate. So unless you think mortgage rates are going to go back down, the only way for homes to become affordable is if home prices go down instead. Because what determines the amount that you can pay for a home, most people, is the monthly payment. So it's not the price of the home, but the size of the monthly payment. That's what homeowners are shopping with. And so they figure out how much they can afford to pay, and that's what they can pay. And those monthly payments are a function of the mortgage rate. So the higher the mortgage rate, the lower the price of the house in order to make those mortgage payments possible. So when you're encouraging people to buy homes today and you're telling them that they're going to get rich because the price of the house is going to go up, that's very misleading, because there's an even stronger possibility that the price of that house is going to go down. And so to avoid that loss, renting is actually a good alternative. For a lot of people in today's market, renting is better than buying. And what, of course, these realtors always overlook is if you can save money renting, you can take that savings and invest it. See, this article was claiming that by buying a house, you're making a smart investment because you're building up equity. Well, maybe you're not building up equity. Maybe you're throwing your money away. Maybe the way to build up equity is to rent something for less than the cost of buying it and then invest the savings and build equity that way. But the other reason that they listed, and this is the one I really wanted to discuss because it really annoyed me when I read this. The article claimed that if you buy, you can protect yourself from rising rents. The article talked about how rents are going up, and of course they are. Right now, rents are taking up, as I just said, 30% of the average income. And according to this mortgage lender, the way you protect yourself from rising rents is to go out and buy. And I'm reading from the article, it said, unlike renting, where your money goes to a landlord each month, homeownership allows you to invest in a tangible asset. By owning a home, you are building long-term wealth and securing your future. It says with rent price, this is the part I wanted. That was on the appreciation. With rent prices on the rise in many areas over recent years, it can be difficult for renters to stick to a budget. By purchasing a home, however, it's possible to secure a predictable monthly payment that remains steady over time and escape the cycle of increasing rent. Now, this is outright fraud. If a brokerage firm tried to, market something like this, the SEC or FINRA, right, would be all over them. But apparently the government doesn't have any rules when it comes to real estate. You can pretty much say whatever you want and get away with it. But to claim that you have stability in payments by buying a home, that if you rent, right, that is an uncertain expense, but you can have certainty by being a homeowner. It's actually the opposite. Sure, the landlord could raise your rent, But once your rent is raised, you pretty much know that for the next year, your monthly payments are exactly what your rental agreement is. And even if your landlord raises your rent the following year, again, your monthly payments are fixed during the course of that yearly rent. And in fact, you might be able to negotiate a 2-year or a 3-year rental agreement with your landlord. And of course, if your lease is up and your landlord tries to raise your rent by too much, you can rent something else. You can move. You're not stuck. It's pretty easy to move out of an apartment that you've rented, right? It's no big deal. Get your deposit back, you're fine. You can move someplace else. And of course, usually if you've been a good tenant and you've been paying your rent on time, your landlord is probably not going to really jack up your rent because he doesn't want you to go, because good tenants are hard to find. They're worth something. And so landlords usually try not to raise rents too much if they have a good tenant, because they don't want to risk losing that tenant. They don't want to take a chance, right, on a vacancy and now trying to find a new tenant. Even if that new tenant may pay a higher rent, how do they know? They have no history with that new tenant. And it's very risky in some markets. You can rent to somebody and then they just decide not to pay, and it's very hard to evict them. So I think if you're concerned about having a steady, predictable housing cost, home ownership is the last thing that you'd want to consider, because this article focused on one thing: the mortgage payment. Yes, if you get a fixed rate mortgage, then your mortgage is predictable and fixed. But when you own a home, that's not the only cost. First of all, you got property taxes. They can go up every year. How do you know what's going to happen to your property tax? In fact, they probably will go up. Number two, insurance. You own a home, you got to insure that home, especially if you have a mortgage. The bank requires you to have insurance. Insurance rates are going up all the time. But the biggest wild card when it comes to home ownership, and anybody who owns a home can verify this, is the maintenance, repairs, unexpected costs that can be huge. You can have a home and all of a sudden something goes wrong and it costs you $5,000, $10,000, $20,000. That is a big problem for a lot of people who are living paycheck to paycheck. You don't have that problem when you are a tenant. That is your landlord's problem. If something major goes wrong with the place that you're renting, you just call up the landlord. He's got to fix it. It's not your problem. It's the landlord's problem. But when you own your own place, it's all your problem. And that's why so many people get in over their head. They're kind of suckered in to buying a home when they don't really have the resources to afford one, because homes are expensive. They're not necessarily your ticket to instant wealth. They can be a money pit. They can drain you of wealth. Yes, during an inflationary time period, when rates were artificially low, you had periods of time where real estate prices went up. But there are also periods of time where real estate prices could go down. And we are living in one of those periods of time. Even though it's an inflationary time period, real estate prices are going to deflate because those prices were a function of cheap money, of artificially low mortgage rates, easy credit. Those things are changing. And so the dynamic of home ownership is also changing. But it's very frustrating to read this kind of stuff, knowing that people are getting suckered into buying properties that they can't afford, especially if they think they're doing it to avoid